Okay, welcome to this short webinar on due diligence. My name's Andy. I am with the Exit Advisor, and today I'm going to take you through the basics of DD. Due diligence is the process that a buyer will undertake on a target company to essentially scrutinize the quality of the information that is coming out of the company. We'll go into what that might look like, but it's basically a way that they can get comfort to know that what they're buying is what the seller is telling them it is, and also that what they're buying isn't going to land them in hot water later down the line. So how does the process work? Essentially, the seller solicitor will set up a data room, which is kind of like a cloud server where all the documents get dropped. The buyer will form a due diligence list. Sometimes it's 20 questions, sometimes it can be several hundred. It depends on the complexity of the business, the size of the big business. Generally, they'll all kind of follow the same format, which we'll get into later in the presentation. But essentially, a checklist gets sent over from the buyer to the seller, and it's then the seller's duty and the seller's team's duty to get all this information into the data room. What kind of stuff happens in due diligence? We're going to examine financial information, contracts, IP, operations documents, all kinds of stuff. There will also be an element of in-person site visit and possible interviews with staff as well. And then what happens is as I said, the buyers will submit the questions, the sellers will have time to respond, and potentially it might lead to an adjustment in price. Towards the end of the process, a report will be filed. Both sides will sign off on it. If there is any negotiations to be had, they'll be had. It's important at this stage probably to mention that as the seller, you will be likely providing warranties or guarantees that the things in the data room are what you've said they are. So you are underwriting that information. Because what kind of stuff do we cover? We'll go through recent and historic management information, completed accounts that are submitted to Companies House. Companies that are under 10 million typically won't be providing audited accounts to Companies House. So these will be the ones that the directors have signed off and submitted. So these are the full accounts, recent balance sheets, any kind of up-to-date management information that the buyer can use to kind of assess the financial quality of the business. Next up is going to be legal. Things like litigation disputes, HR contracts is going to be a big one. IP, is there other things in place that secures the IP? Are the trademarks in place? Is the copyright in place? Is there any other contracts or disputes with either suppliers or customers that the buyer needs to be aware of? Environmental kind of breach is also a key one. And as we'll talk about later, GDPR and cybersecurity is also now kind of, we've noticed a trend of that rising in importance in DD. What are the kind of key customer and key supplier contracts, if there are any in place? Who are your X many number of top customers? If you're a small business, maybe it's 5, 10. If you're bigger, maybe it's 100. What's their spend like? Is their spend increasing? Is it decreasing? What's the growth like? What are your suppliers like in terms of fixing their prices? Do you have any contracts there, or is it more casual? The buyer's going to want to know all of this stuff. Employee details as well need to be covered, and as I've said, cybersecurity issues and security of business in the event of, I think they call it what if scenarios, in case of a server goes down. What happens if your website gets hacked? That kind of stuff. Like, what measures have you put in place as a seller to protect the business against this? As a small business owner, you might not have thought about this kind of thing, but it's important to consider it and think about how you'd respond to that question as it arises in the due diligence. And then market position in terms of your business and your competitors. Is there an advantage? Is there a disadvantage? Are we in a growth market? Are we in a contraction phase? Environmental risks are a big one. If you're in a manufacturing business or in a business that produces anything, could it be that that's gone into the ground and might cause the buyer some legacy issues? And then the questions are grouped into kind of checklists for relevant sections. Can be tailored to the industry. Tech is going to weight more specifically on intellectual property, but it is a bit of a tip is that you can expect somewhere between 100 to 500 questions on this. And it's important that the responses are documented for accountability, like I said, in the event that the buyer will need to come back onto. So, anything you put in there may create a legacy issue for you. Some additional information here. The due diligence process is incredibly important because it builds trust between the buyer and the seller. Up to this point, it probably would have been not necessarily casual conversations, but there wouldn't have been a lot of content that the buyer could have sort of used to accurately and objectively assess the quality of the business. This due diligence process starts that. The seller to be aware that anything you put into the data room is going to be scrutinized heavily. And just because potentially there could be an issue with something, for example, maybe a staff member, that they've had an accident and there's a potential claim coming, it's important to get that out into the open because the seller will find it eventually. And if you haven't declared it, you are going to suffer financially as a result of it. And just because it's negative doesn't necessarily mean that it will warrant a price adjustment. Okay, so what's the importance of due diligence? Well, primarily it builds trust between the two parties. Up to the due diligence point, you wouldn't have necessarily shown the buyer much in the way of objective information, but this kind of opens the door, I suppose, of the content within your business. And so it's important that the information that you put into the data room is correct and accurate, because this is what is going to form the basis of your commitment to them going forward. And so as a result, it can quite quickly build trust or can quite quickly destroy it if you're putting information in there that you know not to be true, or you've told them one thing and you're submitting them something else. It can inform the valuation. So if things don't get declared properly or have been declared and maybe not declared in full, there might be an element of sort of misrepresentation there, which might cause the buyer to relook at the valuation. And from a buyer's point of view, it kind of helps minimize the post-acquisition integration issues because as long as the information is true and accurate and sort of complete, then you should be able to get a much more accurate and objective view of the business. A couple of downfalls to it really is culture doesn't really play into this much. The due diligence process is primarily about financials and legal documents, just to make sure that the risk is mitigated. What most buyers don't seem to do is spend a huge amount of time in the business itself, speaking to members of staff, making sure that culturally they're a right fit for their vision. And so if you are a buyer, it is useful to spend a bit of time during the DD process to make sure that you're happy with the people, because ultimately, the team aren't just contracts in a data room. They are living, breathing beings, and they are going to be the lifeblood of your business. It's important that they're the right fit for you and vice versa. Timeline is another pitfall. Due diligence can be completed pretty quickly in a matter of weeks, but it also can drag out depending on how both the buyer and the seller react. If the buyers are quick to produce information, if they're proactive and submit an information in a timely manner, the buyer can then digest that information properly and quickly and report any queries back. And communication is very, very key in the due diligence process. I will just say here that the phenomenon of deal fatigue is very real in M&A, and as you get towards the end of the due diligence process, you are likely to be very tired on both sides. But it's important just to maintain the communication and maintain the quality of the information you're putting in, because as I said earlier, you are warranting this information. And finally, it relies heavily on humans. It's very the advent of AI is helping, but it still relies on lawyers and it still relies on the buyers to assess this information properly. And if you take your eye off the ball, you can miss some key things. So what's the best practices? Really quickly, start early with a detailed checklist. long before you sell your business, you should be thinking, if you want to gear yourself up for an exit, of starting a data room, setting up some sort of cloud folder, dropping the key things in, and you can add to that as you go, particularly financial information, but making sure that staff contracts are up to date and legal is a really crucial one. So what the best practice is, it's really important to start with the end in mind. If you are planning to sell your business, it's a really good concept or a really good idea to start early with a detailed checklist, set up a data room in the cloud, drop the key pieces of information in, and it'll hopefully allow you to look at your business in a bit of a different light and making sure that things are up to date. So management information you can drop in at a later date as the sale progresses, but anytime you sign up a new member of staff or they go onto a new contract, put it in the data room. Anytime you get a new customer contract or a supplier contract, drop it in. It just helps to build it up quickly. You'll have an NDA signed at the start of the corporate process, but it is important to make sure you have a kind of watertight NDA during the DD process, and your lawyer will typically handle that. And this is kind of important because if for whatever reason the sale doesn't go through, you don't want a potential competitor in the event of, for example, a strategic industry buyer. You don't want them to have that information, to be able to use that information to your detriment. So always ensure that you've got a kind of solid watertight NDA there. And yeah, if you're a seller or an acquirer, you can use a company like us that will assist in the DD process, keep lawyers talking, ensure that the quality of the information is there, and it's just a kind of second pair of eyes to verify and check the information and report back and making sure that it's in line with your expectations. What have we noticed in terms of trends? There's definitely a focus, particularly around like B Corps, of the ESG type governance within a company. That's popping its head up more and more frequently, and particularly cyber due diligence with the rise of AI. Like I said earlier, the contingency plans in place for cyber attacks and servers going down is rising as well in terms of a trend. So due diligence isn't just a tick box exercise, it is kind of a living, breathing process. And if it's going to be successful, if the whole transaction is going to be successful, it kind of, a lot of it hinges on this from both a buyer and a seller side. So don't get deal fatigue, keep going, focus on why you wanted to sell the business if you're a seller, and just make sure you keep doing the steps to get through the process. Okay, guys, that's it. Thanks for watching. Really appreciate it. If you've got any questions at all, please check out the website and drop us an email. As always, we are ready to have a confidential conversation, even if you're not ready to sell your business now. And indeed, if you're on the acquisition hunt, if you're looking to develop a roll-up strategy, give us a ring. We can help you with that.